Yeah.
Good. So we are on the final presentation, but this is a great one. Early in the day, when Dr. Swaroff was speaking, he talked about financial inclusion a bit and how COVID is driving, or how is it affecting that. Also related to that is the idea of identity. And a writer that I like a lot, a guy who's big in payments, a guy named Dave Birch, wrote a book a while ago called Identity is the New Money. So identity becomes very important, because if you're going to do anything transactional financial with someone, you need to know who they are. And that is exactly what Cornelius Saunders is thinking about. He works at a firm called ID 2020, and he's responsible for the management of digital identity programs to ensure that design and implementation is ethical, impactful, and measurable. And that goes just as some of the points that were spoken about with the World Bank comments early in the day. So it's a wonderful way to wind up, or to pull things together from the starting presentation to the last one. I had a great chat with Cornelius the other day, and I'll kick it over to him for a great presentation.
Thank you.
Did I do you justice?
You certainly did. And sort of, I do want to encourage, and I think I caught a little bit of that last presentation, for you to interrupt with any questions. I'd like this to be as interactive as possible. And I do have only 2 slides. I'm trying to, again, ensure that I'm not presenting so much as engaging with the audience. So I do hope for that. As David mentioned, my name is Cornelius Saunders, and at ID 2020, I take our ethical principles and technical requirements and I translate them into real world programs, hopefully with meaningful benefits for the participants. And we don't exclusively focus on financial inclusion. Digital ID obviously has a broad impact, and so I work on health projects, I work on political participation, but today we'll be talking about sort of the financial inclusion aspect and how it relates to payments. So in the next 20 minutes, hopefully, I'm going to provide an overview of how ID relates to financial inclusion and payments, how the weaknesses in the current systems were highlighted by the pandemic, and how we believe innovation, both in model and in technologies, can provide a better approach for the future. As the subject matter and my organization probably is unfamiliar for most of the audience, I want to start with a sort of a brief introduction. So if you guys can see my slide, I'm using something called Sidecar, so I don't know if it always works. ID 2020, launched in 2016, is a public-private partnership, or a non-profit, which convenes a diverse and growing group of organizations, including technology providers, non-profit, microfinance institutions, governments, and multilateral organizations, and so UN agencies in that case. These partners, and hopefully more who join us, are united in that they share the similar vision about the direction and future of good digital ID. They recognize that this challenge is only going to be solved through collaboration and not through unilateral action. We're not going to have a winner-take-all model. And then finally, they expect to be part of a larger network of interoperable solutions with different roles and responsibilities in different parts in it. So though different in many regards, we expect all of the supported digital ID solutions will meet certain high standards for functionality, privacy protection, interoperability, portability, and I think most importantly, user management. It's these qualities that we think will distinguish this approach from what we believe to be suboptimal and potentially harmful alternatives. Unfortunately, I don't think there's enough time to go into those, but happy either to answer a few questions here, or you will likely have my email address so you can reach out. So before proceeding further, I'd like to note that our definition of ID is more than simply to authenticate a person. It can include enabling that person to prove a variety of different attributes, both online and offline. And I know that last presentation covered on sort of the dichotomy there. But it also goes beyond national and state ID.
Hey, what's going on, Chris?
Hi, Chris. Sorry. Well, traditionally people think of IDs, and it can also include functional credentials issued by individuals, municipalities, non-profits, and companies. So it is a really broad spectrum of different types of credentials out there. So how does better ID relate to financial inclusion in payments? Well, there's several problems that sort of we see with the current systems. First and foremost, and I know this was mentioned this morning, that a lack of officially recognized ID excludes approximately 1 in 7 people globally from accessing most formal financial systems. So that's over 1 billion people. These unfortunate individuals can therefore only use cash, or they have to resort to relatively expensive or otherwise restricted payment systems. And so while this issue already existed, the COVID-19 pandemic and the corresponding necessary public health measures have highlighted the dependency of the less fortunate on these local in-person agents to both verify their identity, but also to handle a lot of the transactions. So this is sort of the brick and mortar places you would refer to, though in some cases they're not brick. And this includes for paying bills, receiving social cash transfers, or sending remittances. I mean, I think a little closer to home, it's interesting to note that the US government sent 20 million paper stimulus checks. So I thought that was, I mean, for someone who's a bit younger, I found that remarkable. But this issue is not exclusively a developing world problem. Even for individuals with the required ID information, so myself, I think probably most of the audience, the process is inefficient. For each used account or platform, I must repeatedly share my personal and sensitive information. This siloing of information and the repeated sharing of it then leads to what we think are the next 2 problems. The second is the duplication of onboarding is inefficient for both companies and individuals, and yet still leads to fragmented information. We speak to many organizations in the payment space, in sort of the financial service space. They have significant costs to remain compliant with KYC, AML, and the fraud regulatory requirements. They're expecting additional costs for complying with new privacy regulations, so GDPR, California Consumer Privacy Act. There will likely be more in the future. But even with all of these compliance measures, these companies are still frequently fined for violations. For instance, in 2017, Western Union agreed to pay over $500 million. They were followed in 2018 with MoneyGram paying $125 million. And even beyond these fines, many payment providers still lose billions of dollars to fraud. Slightly differently, and I wish I could go into more depth, but we don't really have the time, is mobile money and mobile payment services. While they tend to be more accessible and efficient, must contend with ID duplication, which is a big problem here. And then they also have restrictions on transfer amounts due to their inability to adhere to regulatory requirements. The final major issue that I'll cover, and I think probably the one closest to our heart here at ID 2020, is that these multiple siloed and centralized sources of personal information increases the risk of data breach and privacy violations, and which could lead to identity theft. So it costs the consumers time and money, but more importantly, and I'll talk about biometrics later, is that it can cause them irreparable damage because certain personal attributes can't be changed, like a password. And I think furthermore, we know that perfect cybersecurity is impossible. I'm sure that a few people listening, I personally was affected by at least one of the major data breaches over the past few years. It requires you to change your password. It requires you to have increased credit score monitoring and fraud protections. And it's just not pleasant. So perfect cybersecurity is not going to happen. I think related to this notion of protecting privacy, we also believe that individuals have a right to ownership and control over their personal information, far beyond what is available in the current systems. So for instance, to give another example, I can't directly share my credit score for the purposes of obtaining access to a financial service. Instead, I share select personal information, which then enables that service provider to request a third party to provide my credit score upon which it bases its decision. Now, in this case, sort of beyond the fact that I don't have as much control, I am now compelled potentially to share information that is sensitive and unnecessary. So hypothetically, a service provider may only need to know that my credit score, may need to know my credit score, but will be forced to collect my social security number, my address, and potentially other information that they may not need, but may need to get to the credit score. So where does COVID-19 fit? I think the pandemic has highlighted in quite stark terms that these aforementioned weaknesses inherent in the existing systems, particularly sort of the sudden severe need to depend on digital and remote systems reveal the depth of the digital divide. So this is what we've seen through our work here at ID 2020. At the beginning of the pandemic, I had a few conversations with program implementers about their frustrations with the impossibility of going completely cashless. In many of these places, it's just not realistic. And this was despite it being perceived at the time as a potential source of virus transmission. In other cases, the challenge being discussed was devising mechanisms for families to safely access remittances or government financial support while minimizing fraud. And again, to build on my previous sort of US example, paper stimulus checks typically came much later than the stimulus direct deposit. So there is a time cost for people who can't use the more advanced digital systems. I always think this is funny, though it probably shouldn't be, is that with the soaring unemployment that we saw during the pandemic and the pandemic response, state governments had to issue calls for COBOL programmers, which I'm not a programmer myself, but sort of the joke is that hasn't been taught in decades. And in fact, in many ways, it's quite sad that they're using such outdated systems. So in some ways, the COVID-19 pandemic is an opportunity because I think rather than simply updating our digital systems, sort of continuous innovation, I think it gives us an opportunity to use this moment to consider new models, more disruptive innovation, that are enabled by some of the new technologies that we're seeing, and I'll get into those a bit later. I want to quickly pause. Are there any questions, David, or I'll keep going?
There are no questions. You're covering a lot, and a lot of it.
Quickly.
But please carry on, because I'd like you to get through what you want to speak about.
Yeah, and I think sort of on the COVID-19 front, the second thing that we've seen and sort of experienced quite personally is that, although perhaps more prominently so for my healthcare work, is that there are heightened concerns about privacy. So this is the possibility of governments or companies using mass tracing of their residents has amplified existing fears that we've seen from data breaches and from the sort of data mining scandals in the past. To give you a more concrete example, during COVID-19, I don't know if some of you came across some serious misinformation about digital IDs, sort of espousing claims that it was a mechanism to sort of control people, track and control people. These statements are obviously false, but I think it is insightful here to think of them as a reflection of just how deep the fear is of this erosion of personal privacy and autonomy. So just sort of reiterate, the claims are false, but sort of the underlying sentiment is something that we should definitely acknowledge. I think that it is easy enough to criticize the failings in the current system, but I think it's important to acknowledge what are the alternatives, what are the potential solutions. And so what we're advocating for is this user management approach. Sometimes it's referred to as self-sovereign, decentralized, user-centric. There are a lot of different names out there and there's sort of different forms, but they all sort of come under the umbrella of putting the user at the center of the system. And this innovative approach is enabled by cutting-edge technologies. So namely, one is better biometrics, which work on more affordable and portable hardware. And this can enable accurate deduplication and authentication. And so we've worked with facial recognition, you have fingerprints, iris scans, vascular patterns, behavioral signatures. There's a whole host of different biometrics out there, which you can use multiple factor. There's different ways of using this technology to enable rapid authentication. I think the second one is, and I'm always hesitant to bring it up, is around distributed ledgers or blockchain. They offer several advantages. Most notably, I think, is they can help with verifiable credentials. I just want to be very clear that blockchain, we don't think of blockchain as the solution, but it certainly could be part of a solution. Now, these cryptographic measures mean that trusted organizations can issue a tamper-proof credential, for instance, to myself, And then when I go and interact with the business, that business in this setup would no longer have to contact the issuer to confirm the validity or veracity of the credential. So to sort of harken back to my previous example, I would be able to provide my credit score. They would know that this credit score had been issued and sort of proven. You could even include timestamps by a trusted organization. And it gives me greater autonomy to sort of share that information, share who that information is getting. And it would enable businesses still to be fairly confident about the veracity of that credential. So it's sort of best of both worlds. It could, this model could theoretically improve customer experience and enhance security and significantly reduce these compliance costs mentioned for financial institutions. Now, as I say this, I'm sort of slightly smiling because I just outlined sort of a potentially transformable approach with a cornucopia of benefits. And sort of the obvious question left is, then why haven't we done this on a mass scale? Why are these user-centric digital identities still a relatively small part of this digital ID ecosystem? I think there are several reasons, including that it takes time and money, but I think perhaps more importantly is that it requires a lot of coordination and agreement between diverse stakeholders. Many of which, particularly for I think nonprofits and for governments, are a bit slower to move. On the technical side, we need universal agreement on standards to enable interoperability. There also needs to be mechanisms to allow individuals to take their personal information and credentials easily from one platform to another, so you're not locked into a particular platform. On the regulatory side, there needs to be a significant move to revising legislation and regulatory frameworks to enable to guide and facilitate the safe implementation here, including protections for vulnerable individuals.
Hey, Cornelius, we're getting some questions here.
Of course, I'll pause then.
Yeah, no problem at all. One was, can you suggest any examples of how this model could work? Are there any places where organizations are attempting to put something of this in place?
Yeah, happy to. So I'm going to use development and context examples simply because that's where most of my work lies, but that doesn't mean we're not doing this in more developed economies, and that I think will soon be the norm. So for instance, in Sierra Leone, there will be a big project where we're using a combination of facial recognition and behavioral biometrics to enable an individual to create this sort of rapid authentication. The technology will be using a form, I can't discuss the specific provider, but they will be using a decentralized blockchain to enable them to securely record those credentials. And the government's involved, and it will have different sort of service providers, authenticators at post office, at banks. One sort of more commonly available example, though I'm sort of loath to provide it, is with Aadhaar in India. That's a centralized system. So the back end is a little bit different, but in terms of using it to authenticate individuals and to reach a lot of people, I think it's a fairly good example. And that uses, I believe, fingerprints and iris scans, but I'll have to double check that.
So that's one that actually came down from the government directly. And yeah. Whereas the one you mentioned in Sierra Leone is a partnership model?
It's a partnership model. I think the one in India was led by the government. It did require, as we've seen, the partnerships with local banks, countless local service providers to accept the authentication from Aadhaar, but also to enroll individuals. So that, even though that was led by the government, it still required a lot of partnerships to make it work. This is one of the big concerns that I have, is that we don't want to just create another cool widget where an individual can authenticate themselves. They can have this great, verifiable credential that could theoretically prove they have either a certain credit score or a certain attribute or a certain income, but nobody accepts it, at which point it's essentially useless. And I know we sort of TD presented previously, we would like credentials or qualifications or whatever issued by TD to be accepted by a city or another bank. So it's still, the partnership element is still one of, I'd say, the most important considerations to making these practical and impactful.
So we've got about 5 minutes left. I'd like to allow you time to get through all the points you wanted to cover. So why don't you proceed?
Yeah, there's a few extra. I sort of finished off with that legislative and regulatory front, and there will need to be significant revisions to financial regulations. Organizations, particularly in the banking sector, will need to know to what extent they trust credentials issued by other entities. Are you going to trust a credential issued by a U.S. bank versus by a foreign bank, for instance, just a purely payment provider versus a bank, or even an NGO versus a bank? And I think to an additional extent, if you trusted a credential issued by a bank and provided services, and subsequently it was found out that that credential was issued incorrectly or fraudulently, who's responsible? Who has to pay the fine? I think it sort of comes down to money in that regard. So there are a lot of outstanding regulatory and sort of legislative components, and then I'm more focused on, particularly for most vulnerable groups, ensuring that operationally it works for everyone. One of the things that COVID-19 pandemic, I think, revealed in quite stark terms, and I found it interesting when we first started out, everyone called it the great equalizer, except I can work from home, I can do all my transactions from home, I can order Amazon to deliver my groceries. For a lot of people, this divide is stark, and COVID has put it in relatively stark terms, where if you can't get to the bank, you can't get money. Without cash, you can't buy your groceries because you can only pay with cash because you don't have any other system. So I think it is important on an operational perspective to make sure that when we design these systems, and not just the technology, but who's involved, how we reach them, making sure that they can go to a brick and mortar store if they need to, that it works on, if not smartphones, that you have an e-card alternative to allow those individuals who may not be able to afford smartphones or less high-end smartphones. There are so many questions outstanding that we're figuring out, but we do really think it's the model. So I think I'd like to pause there and give a little bit of extra time for questions, if it's possible.
That's fine. I don't see any up on the screen right now. We've got a couple of minutes. I mean, I think it's all fascinating. I mean, one thing that always comes back to me is whether, where the model comes from and what's the best way to promulgate it, because it requires such great coordination. But you've touched on that a bit. Any further questions from those attending? And then I'll let Cornelius wrap up. I'm not seeing anything coming in, so why don't you proceed
I think I'll just build on that comment, David. I think it's incredibly important for financial inclusion, for payments, but also for sort of digital identity is so broad and requires so many different actors. So if you look at, I still think I have that slide up with the different organizations that are involved in ID 2020. You have academic institutions, you've got Kiva, which is a microfinance institution, MasterCard. We have a number of other sort of payment type service organizations which are in the process of joining, other nonprofits offering humanitarian assistance. And what I see is that financial inclusion in payments, it spans all of this. So a nonprofit may be issuing an unconditional cash transfer. They'll use similar mechanisms or should use similar mechanisms as another organization that wants to ensure that these individuals have access to bank accounts or savings groups, with the idea that eventually everyone is included in this global financial systems. And that's just not the case at this point. But we believe that it will take this cooperation, this collaboration. I think I'm sort of mandated to almost say at this point that if you are part of an organization which is interested, please check out our website. It's sort of our name.org. If you think you can sort of bring something to the table, or you're interested in learning more about how this affects your work, we're more than willing to sort of help with adjusting and addressing those concerns. And I'm probably going to add is that we don't have a particular solution. What I outlined now is a type of solution. And so our different providers can all have different solutions which adhere to this type and which adhere to these standards. But we're not advocating for a sort of a one size fits all.
Well, I want to thank you as for all the folks this morning at spending a little time and informing us on this. We've covered a lot of ground in 2.5 hours. I hope all the participants have found it interesting as I have. I know the presentation will be available to those afterwards. Just contact the organizers. And again, I thank you very, very much. I wish you the best for the rest of your day and a good weekend.
Thank you, David.